Welcome back to another video. In this video, I'm going to talk about real estate investment trusts, also known as REITs. But before I do that, I'm going to go ahead and give you a quick update of my portfolio, and then also show you what type of REITs I have in my portfolio. So these are the type of REITs I have. I have 5 of them. This one is they mostly own malls, and this one is retirement homes and things like that. And then going back, and then I also want to show you this is the dividends earned from these REITs, and a quick update. We are down on the red, I think, on the day. Oh no, actually back up to the green on the day, but a red on the week. Okay, going back to the topic. So real estate investment trusts, why REITs are good investments or good investment. So first, they pay great in dividend payouts. The percentage is really good. So if we go back to real estate, and then let's check out this company. So O pays about 4.59 in dividend yield, and then Store Capital pays 5.62, and then LTC Properties, they pay about 6.36. So those are the yields I'm talking about. It is higher than the usual you will get with other investments in terms of dividend payouts. And same here, 5.97. And usually this is higher. They actually lowered it down due to the pandemic. I think Store was paying at one point like 12%. So Simon Group still has theirs as 11.90. So the REITs are in this sector, they pay really high in dividend yield. Okay, and then I'm gonna explain more on this topic. So one is great dividend payouts. 2 is very diverse. What I mean by that is you're not just investing in one type of property. It can be from hospital building to office space to many different type of real estate that you can own, which helps you be diversified. And you can also enter with a smaller capital. For example, going back to my portfolio, so I only have about $155 of Realty Income Corporation. You can't really do that with a lot of real estate. So that's another advantage of REITs. And then going back, and then also you won't have a lot of let's say if you had the capital to buy a property, you do have to collect rent. That's a downside of owning a property or rental homes or anything that has to do with rent. So that is the downside of that. And when and it also will take up a lot of your time to manage. So that's another downside of owning an actual rental property or anything like that, comparing to REITs in terms of like stocks. So what qualifies, or REITs qualifications, or what qualifies something a company as a REIT? So if they invest at least 75% of their total asset in real estate, that would be considered a REIT. And then also, and they get at least 75% of its gross income from rents, from real property, interest on mortgage, financial real property, or from sales of real estate. And pay at least 90% of its taxable income in form of shareholders' dividends in each year. So this is very important. So they're pretty much by law always going to pay shareholders a lot of their income. So that's another thing of them being very sustainable. And how can you buy REITs? So like I did, you could just buy them from the stock exchange, or you can just buy a stock pretty much. And then you can also buy a mutual fund, active fund, index fund, low cost. And you can also buy ETF low cost. And I also want to show you the history of REITs going back to just 2000 and how they performed. This is just like a quick graph. So they're always on the positive for the most part. And then we had the crash, 2007, 2008. It went down about 37%. But even considering this, let's say you don't sell your stocks at this time where everything is just at the bottom, it did come back up with over like 50%. Kind of like within 2 years, you would be back at whatever gains you had before that. So it's not always, it is not a risky investment, but it is a cycle like the stock market. So when real estate is really high and then it comes down, pretty much, you will experience the losses. Just be sure to not sell at the bottom point, pretty much. Then you would be losing a lot of your gains. And that's all I got for this video. Thank you for watching. See you in the next one.